What's up, hello peeps, and we're heading into holiday, and well, I'm start issuing in the gifts by just sharing some investment strategies that you guys can probably take over into next year. So in this video, I'll be explaining the concept of dividend investing. I'm going to also show you how get started with it, how to find the highest dividend paying stock on JSE in less than a minute, and explain to you why I'm predominantly a dividend investor. If any interest you, ensure you like, share, comment, subscribe, tell a friend, and with that said, let's begin. Alright, so what is dividend investing? In the simplest form that I can put it, dividend investing is really just an investment style where an investor predominantly invests in stocks that pay out cash to its investors on a regular basis just because they own the shares. Primarily, most sophisticated investors that predominantly invest in dividend paying stocks typically reinvest the dividends that they get into actual dividend stocks or into even the same dividend stock on a continuous basis over a long period of time. So they get a dividend payment this year, they invest it in the same stock, get more the following year and the following year and the following year, until really that concept compounds over time to the point where you're getting hundreds of thousands or even millions of dollars in just dividends alone. Alright, for example, so the CEO of Berkshire Hathaway's, I think we pronounced it right. So the CEO of Berkshire Hathaway's got $704 million in dividend from just one stock, which was Coca-Cola. I know the CEO is Warren Buffett. However, in that same year, just to put it in perspective, the CEO of Coca-Cola got $24.8 million. So to just show you, there's levels to this. And this was in 2021, so literally last year. The truth is, the strategy is very, very powerful. It's just that it's kind of boring and it's slow to accumulate. But once it does, we're set. Trust me. Show you a case in point. So what I'm having them on, let's do carriers because we can fold that one here. But I don't know if you can see it. Or maybe you can see it. But this was in, well, this was last year actually, come think of it. So last year, I think we're not see though, not sure. We get like $220 and 63 cents. This one is from Honeybun, this was from 2019. And I got $9.10. But yeah, so case in point, this was just last year. And I got $220.63 from Carriers, which is one of the highest dividend paying, if not the highest dividend paying stock. And to date, when I check, because they did another dividend payout this year, which is ending at 2022, I made about $8,000 something. I didn't do the math, but I do it right now. So I'm doing the math, and basically that's like a 3,636% increase over the last year. Granted, I had been investing continuously, so that wouldn't happen in just reinvesting, but that's the aim. So you reinvest, at the same time you're getting dividend payouts, all that money just compounding and compounding and compounding. But let me explain that later down in the video. Alright, so why do companies actually issue dividend? And there's really three main ways I see, give or take. And the first one is they're just sharing profits. So typically when a company makes a lot of profit, they just pay out some to the shareholder and just to say, oh, thanks for holding the stock. The second thing is they don't really have nothing else to do with it, so they issue it to shareholders. But I'll explain. So like whenever a company invests, all the money they must invest for the year, then pay off them debt obligations, all them innovation and everything, and then them put aside them reserve, so them really not much for do, they can pay out to the investor. And typically this is for like well established companies that are literally cash cows, so like Trans Jamaica or Carriers Limited. Just tell you a while ago, hint. But yeah, so the third thing is really just to like compensate shareholders for the lock-in stock price appreciation or movement. So basically just a pure cash in form of compensation for just say, well, although the stock price don't really move that much, here is a little cash to, say thank you for holding on. Just having a little faith now, even though it not move. And Like trans, as I was saying, trans, the price didn't move from the list, but they were still paying about like 7% to investors. So that go. But note that I think this is very important. Dividends are taxed at 15%. So you have regular tax, but dividends are taxed at 15%. So this means, so let's say you have a stock that values $1,000, and they say they're going to pay out a dividend of $100. Just understand you're not going to get that $100. You're going to minus the 15% out that $100 before you get it. And not worry if you have to worry, say, we have to pay the government. No worry. Them already take it out. Them already take it out already. So you not seeing that. You not seeing that. You're not for worry. You're not for worry. But yeah, so basically, say I have the $100. All you have to do is multiply it by 0.85, and then you get $85 in dividend payout. So yeah, although understand that dividend payout is not mandatory, so the company don't necessarily have to give you dividend. Easy me is not a mandatory for ordinary shareholders. So that's kind of something you have to look out for. So make we jump to the Excel sheet I don't ramble now, and I'm going to show you. And for those who kind of feel timid about Excel sheet, we're not going to stay long. I'm just going to show you a quick shortcut that you can do to generate all of the stocks them that pay out dividend, and then how you can make use of the information. So I'm everything we're gonna spend like 2 minutes. So let's go. Alright, my lovely people. So this, as I say, very simple. So the first thing you will do is go to BAM and go up on Google and go type in Mayberry stock tracker. As you mean, this is the Mayberry update. The literal update is every day. So you just click on that and you're going to carry it to the page. Alright, as you can see, it says Friday, December 9th, which is Friday, December 9th, which was last year. So what it show you company closing price, changing price, P ratio, 12-month PE, book dividend yield for 2022 and dividend yield for 2021, and you can see already see some of the top dogs and carriers. But anyway, so we'll go to it. So you go up on Excel, what you're going to do, you're just going to click on data, we're going to from web, and then basically you're just going to paste the URL. So we're just going to go to BAM, Chrome, copy sheet. We're going to just paste it here, and then okay. So basically Excel will do everything for you. Alright, basically this is what I'm going to come. We're going to click on, you can click on document, or you can click on table. We're going to click on table, and you're going to just say load data. Alright, see, it just load it into a nice table format for you already and everything. You see me? So that. What I'm gonna do also, before we even go further, at the same time, what we're going to do is just go into refresh connection properties, and it going to show any background refresh every time, refresh data. So basically click on refresh data when opening file. So that's all you need to do. You can probably just change the name after, but that's all. So just refresh data every time we make Excel sheet. So basically every time updated, it going automatically refresh. So just going to press OK. So I'm going to have the mirror will change, and you can test it out even Monday and see if it changes. So the mirror will change basically. So alright, so another thing that you might want to probably fix up your Excel sheet and such, you can just go so ensure that everything depend like one level basically. So everything depend one level. Also, what did I converted this, so we just click on the whole sheet and then just change it to percentage basically, because it wasn't on percentage at first. So yeah. Alright, so what you can do, like after knowing you fix up with some little what you can do is basically just filter. You can filter by last year to see what paid the most last year. You can scroll through it manually, like you can see like careers, VTT, so the big figures. You can use conditional formatting, which is basically just anything above a certain price. You can do that, but that's not necessary. So basically you can go to BAM now, click on that and select all, and then just scroll and look. So say you want stocks that are over 4%, that pays over 4%. Go to BAM and just click all of those stocks that pay over 4%. Just click everything and then press OK. And it'll show you the stocks that paid the most for this year. So Carreras, Trans USD, Trans also pay. However, the date is not updated as yet. I don't think they had established that they paid out dividend. Now already give dividend already. So it's a bit slow on the dial, but before the year out it's supposed to good. So yeah. But I think if you like unselect back like if you select everything back and then check for trans, it's supposed to show well inupdated. So that's right. So yeah, that's really it for this person long. So you can use this essentially and gauge the stocks that you want like IOT and them things there. So yeah. Alright, so like all that done, I guess a little personal story. So as I say, I am predominantly a dividend investor. And the reason for that is because, well, personally, I want to have at least about $800,000 in dividend per year by the time I'm 30. I turn 22, January the 8th. This is next year. So I turn 22. Basically, I have 8 years left. So doing like just like a rough math, say more 5%. I won't go into the standard deviation of it. Why I'm just choosing a basic number. So 5%. I'm going to need at least about $16 million invested between now and year 30 for me. To like can get that dividend cash flow. And as I say, like maybe a year ago or even 2 years ago, I invest my little chumps and may I get my little $220 and them money there. Rich and a lie. Rich and a lie. Them time them they have all this 1,236 units of careers, which was not bad. You see me? And everything takes time basically. So it's really just the consistency of it. So just continuously invest. And the thing is, you might not even like feel like you're making progress, but if there's something that I learned in Finman class, is that $1 today is worth more than $1 tomorrow, and that's essentially the principle of time, value, and money, which we'll go into. Yeah, we'll go into that later on, but invest now and just reap reward later. You see me? It's just really the concept of the compound effect, and I did do a book about it. Yeah, can I check that out? But essentially the concept is just continuously investing over a long period of time. You get not incremental but exponential growth. And incremental would mean like you just a step on a step. See if I can find a visual representation to show you. But the exponential mean like you start slow, but then it gradually goes. And what the last thing now I can talk about is really just valuing a dividend stock. And to keep this video short, come on, give a lot of videos before the year out. So keep the video short. I was going to say use relative valuation. I don't think I have a video on it, but I've always been using relative valuation to explain like what price you should pay for a stock. So there's 3 ways you can buy into the stock. You can use relative valuation. You can use the dividend growth rate model, which will be another video for next time, or we can use just dollar cost averaging. And the truth is, how I would say using dollar cost average is like buying. So say buy a stock at $10 today, and stock price fluctuates over and over and over. If you can see it at $9 or $9.50, you try jumping on some more, and then if not, and you like close to your buy it, you know, buy a little more, but try always aim for buy it lesser than the price that you had bought it for. I can probably do a video on weighted average, but I already have an Excel sheet in a course that I'm creating. It's two job. There's have some little tweaks, some more left out, but there's also a relative valuation Excel document in the Telegram group that I have, so you can use it if you want. Free of cost. No, just ensure you like, share, comment, subscribe, that friend. But yeah, that's that. Let's say before the year, I'll do some more in-depth videos explaining certain concept. My aim is to, like, you know, flood, you know, give or take. My flood is maybe like 2 videos a week. But yeah, so flood, you know, with enough information so that going into the new year you have a better understanding and you have tools that can, you know, help you, because even though other stocks also the personal finance. And yeah, so this is the end of the video. I know it's short, it feels short to me, but yeah, ensure you like, share, comment, subscribe, tell a friend. Yo, catch you in the next video. Peace.